Gregory, good morning. Brad, good morning. Larry, good morning. Marty, good morning, Marty. Mike, good morning. Steven, good morning. All right. So a big thing is going on right now. Danny, good morning. We got a captain set up switch trade long on the 70 NT Rinko. So that's a big, stable buy signal. And we're expecting at the open to see at least multiple candles in a row in favor of the long pressure, and could potentially take us to 60s or 80s. So just keep an eye on that type of formation at the open. The 200 and the 100 are out of sync, meaning the market is out of harmony. So you're getting a two-sided market, long and short. And we're looking for 813 to hold up. And if it does, and it should, we should be seeing a price that pushes above 45 to the 50s and 60s at the open. All right, everybody, remember today is the last day for Apex 80%. I ended up buying like 8 accounts yesterday. So just remember that. All right, guys, 1 minute, 1 minute. Here it comes. Cash market open. We should see a push, man. We should see a push higher. There you go. Good morning, Sayed. So 29 and 45. So we're getting the market bouncing here back and forth between harmony zone number 1 and 2. They're buying harmony zone number 1, selling harmony zone number 2. This signal is still intact as long as we don't break 13. If we start breaking 13, then it's going to take a step back here. But I'm definitely looking for pullbacks as a buying opportunity on a scalping basis into 60s and 70s. If they break the 40 again, gonna start pushing higher. We have news at 9:45 Eastern, which is Chicago PMI. We have CB consumer confidence at the top of the hour, and then we have what else? That's the news that we have. Here you go. Good morning, Tara. You guys seeing this? I mean, that's just basically what. I mean, they spent some time here trying to build up some stops, but with that type of signal coming in this morning, it's. So we got to 57. All right, so 57, and they're pulling this market back. I mean, we don't want to see this is the bottom line, the 17 to the 13. We don't want to see those prices come up. As long as those two prices don't come up, we have a good shot at running back up to Globex, which is 918 and a half. If you're looking at ES, for example, you're seeing a captain setup long right here at 129.75. So that's anything under 127 in ES will shift the picture as well on the short side. Okay, so the market has a chance to assert itself on the long side if we continue to protect those levels we just talked about. And and harmony zone number 1 is 18 by 28, and zone number 2 is 43.53. They're buying this zone and selling this zone, and they've done it a few times so far. I mean, this is once, twice, 3 times, 4 times, 5 times, 6 times. This is the 7th time that the market does this. I mean, yeah, this is another example of that right there. So we got news coming up here in about 6 minutes. I'm going to be flat into this news. And going back to this signal that we talked about early on, Captain set up switch trade, flipped here, and they're coming back to retest it. So even when the market flips, you're getting buyers coming in and taking over and pushing the price. So that's positive for the longs this morning. And we talked about 60s and 80s as potential areas. So as long as we continue to trade above that 20 to 200, or from 20 to 800, so there's a 20-point protection zone. Yeah, see that? That's good stuff right there. That whole zone right there. So here we go. Another switch trade. That's double switch trade. That's strong. You're gonna see 70s and 80s all day. The reversal of this rotation, or the 200 NT wrinkle rotation, is 17,918. No, sorry. Yeah, which is actually true. 17,918 and a half. That is the level. If we break it, then the market will be on a swing trade basis, longs on pullback. All right, 42. And this is the the bottom end of the Globex band, by the way. So that's going to be a bit of a resistance. So now we broke this. We should expect a bit of a pullback, potentially to 53, and then at that point we can start looking at 53. Yeah, that's a big retracement. Let me see here. I mean, that area is resistance. See that purple zone? That's the Globex zone. We should see a little bit of a pullback. So we got to the 70s, 75. I mean, that's as good as it's gonna get for a target in that type of rotation. We're looking for a pullback, and that pullback is a buying opportunity for us. We have harmony zone number 1 is 843 by 33, and zone number 2 is 18 by '08. We'll reevaluate the longs if we break anything under 820. So back to that original signal that we talked about. The longs, the protective zone. This captain set up with a switch trade and gave us another switch trade. So it's natural for the market to just burst back up and hit the 70s and 80s. Pullbacks are buyable. I mean, I wouldn't be surprised if we get to that 53 and trying to scare some people out of their trade before they run it back up. But as long as this structure right here, like structure from here and this zone is protected along with this signal captain setup on a 70 NT Rinko, you're looking for a bias on the long side. Okay, here comes that 80s. So we got CB consumer confidence at the top of the hour. Watch out for that. Shingo, good morning. See, they're gonna try to head back up there. Potentially back to that 70. We got news coming up here in about 9 minutes, so I'm gonna be on the sideline till that happens. So what is this market doing? I mean, it got in sync on the long side. It perked up into the Globex band and came back in to retest first support, which is harmony zone number one between 43 by 33. We're looking for pullbacks as a buying opportunity, and we're waiting on the news before we act. So seeing this, came up to that harmony zone, ran back up. Okay, that's a good sign. We need to really kind of break up a little bit here. 1, 2, 3, 4. Okay, so we need to trade above 63. News in 8 minutes. Yep. Thank you, Sayed. We're waiting on that news. Tamir, good morning. Welcome to the room. Switch trade. So what is the market doing right here? Establish channel number one and ran it up. Let's see if we can get channel 2 out of this. I mean, ultimately breaking above that 75.80 is going to be the key for the longs, and the behavior generally right here is more long than short. We got so close though. We got so close to our target. Target was 93 half. 93 half. Marty, how we doing today? Where we at? I feel like you're up for the day. Am I right? Well, then you will be up today. All right, so we have channel number 2. So the market needs to break that into the 70s to reestablish the longs. You start breaking the 50s, then we're going to go into more of a consolidation pattern. Right now, the market is out of sync. So it's a two-sided market. The positive thing is the fact that we're trading above harmony zone number 1, which is a bullish behavior. So now if we break anything under 35, you're going to basically go into a consolidation phase in this market. There is resistance from 68 to 85 and harmony Globex band. That's an area of resistance, especially if you run up to it. And Globex is 918. So there's a little bit of distribution going on in this area. We want to see how these pullbacks are handling this type of distribution. Are we making higher lows? There is a difference between how NQ and ES is behaving. ES is weaker than NQ. ES is consolidating between harmony zone number 1 and 2, so it's already in a consolidation phase, and NQ still have a little bit more strength to it. I rather be buying the pullbacks against that 35 level and looking for a break into the 80s and potentially the target of 93. We got 3 minutes to news, and that puts me on hold till the news hits. Fuckers. One minute. There you go. Target is 93 half. That's where we're going. Whoa. That got there quick. That got there quick. I mean, we broke that channel and we came in for the railroad long into that target. Next target is, that is pretty nice. 918. 918. Good morning, Sheila. How are you? 918. Next target. Pullbacks are buyable on a swing trade basis. 918 and a half is Globex. Harmony zone number one shifted to 68 by 58. 43 by 33 is harmony zone number two. Looking for pullbacks as a buying opportunity. We're not too far away from an entry here. I'll take a shot at it here. Wow, that was quick. And one more here. Gonna flatten that trade here as a little bit deeper pullback into harmony zone number one. I think I probably flattened that trade. We're closed at 68. We should push up a little bit. Here we go. Yeah. So they're protecting Harmony Zone number one. So I bought the top end of it, bought the bottom end of it, and just to kind of manage risk, got out of the middle of it. But that's the natural reaction to that type of behavior. Let's see if we can catch the next pullback. The market is out of sync again with this move. So we're getting a two-sided market again. So we're going from a swing trade setups to scalping setups, to swing trade setups to scalping setups. And that's just kind of what the market personality this morning is. Yeah, and that tells me this area is just such a big distribution area, which is the bottom end of the Globex band. The longs have not taken hold of price and just decisively trending it. So what does that tell me? That tells me that I need to stay scalpy and I need to stay with small number of contracts. Take your 5-10 points and move on till the market sticks. So how would they stick the market here? Meaning that they will hold on to a pattern of thinking and continue to hold on to it. Okay, it's 94. You break 94, then the market is getting back in sync and making two switch trades in a row on the long side, and then 918 is a very distinct possibility. I'd rather be looking for the longs than the shorts. However, if we break anything under 840, that shifts that personality. Okay, and the first sign of trouble is 855. So we don't need to see 855, but definitely 840 from the long perspective is going to have a major impact on the personality of the price action. So see that, yeah, they protected that one barely. They're gonna fight here, that's for sure. So you probably get 60s out of this thing. Yeah, boom. See that 40? They defended that with their life. So what are we expecting here? I mean, that's they're going back to balance, which is if we've seen how they've done this, they go into balance and out of balance, then back into balance, out of balance, back into balance, out of balance. So that's just their balance area right here between 50, 57, or basically 60 to 40. That's a 20-point balance area. So now the market is back in sync, and we're looking for protection of 50 to the 40, and pullbacks are viable to a breakout back up to 918. Obviously, we'll reevaluate the longs if we break anything under 49. Yeah, we're gonna see a little bit of pullback here. We're gonna see a little bit of a pullback, so watch out your positions. We may see 55 happening soon. I'll take just a scalp. very, it's either going to happen here or it's not. I'm going to get out of that trade, but it should really get to 55. Now we're going to see it come to 55. Damn it. That's fine. I made a little bit of money, but not much. It's a point and a quarter. It just paused there, and this market is just a personality. Like, see, it got to the target. It just paused, and I was like, okay, if it's gonna pause here, why is it pausing? Like, it shouldn't be pausing. It should be just flushing. Do I want to take the risk? Just go flat, make few points, and move on. That's fine. Let's move on to the next one. So what got me to think in terms of short right there? Look at the 30 NT Renko. So you see a distinct pattern in the market. Let me see if it repeats itself. It always repeats itself. A top end of range is right here. You see that? Where it runs up 3, 4, 5 candles in a row, pulls back 2, runs up 1, pull back. So that is a switch trade right here against a high and a lower high. And that typically will give you a couple of candles in your favor on a scalping basis. Okay, so that's exactly what I got here. I was like, okay, I've seen this one before. And I didn't like two things. One of them is the fact that this follow-up candle kind of retraced in somewhat of a major way, and then that put me on alert. Like, okay, well, the only time they kind of do this, like 6 out of 10, whenever they do that, they flip that candle. So I gave it a little bit of grace and see if it's gonna go and move, and got out before that happened. But that's fine. But that's just the logic of that trade. Yeah, so it's a consolidative market, Adam. That's a market that keeps going in and out of sync, and we're getting middle of the range chop. So that's it. If I'm looking for a trend trades, and I'm putting my orders right here to go along, you're just running into a whole lot of middle of the range noise, and it's just chop heaven here. Which actually we could make money off chop. It's just we have to trade not the middle of the range, but the edges of price. So basically, when the market sells off into harmony zone, for example, that sell off is buyable. When it runs up into a harmony zone, like something like that, it hits it right there, boom, here, boom. That is a bit more effective trading in this environment than trying to go trend trading and getting yourself right in the middle of the range. Tara, yeah, that's the thing about this market. It's constantly changing. That's exactly right, Adam. Nothing but traps. It just now you recognize it. So you recognize it. You understand that it's not a trend following environment. It's a scalping the edges environment. Act accordingly. Yeah, yesterday, today. So if you look at the bigger picture, you see why. And this type of behavior is constantly present whenever the market makes a major move, and it doesn't matter. Major move to the upside, major move to the downside, it doesn't matter. Once you have a big move in the market, the market goes into to a phase of manipulation, accumulation, and distribution. Here you go, Jeff. To coin a word you said. And that's true. That's just market goes into these type of phases, and it's more pronounced whenever you make a big run or a sell-off. So half the battle is awareness. And if we are aware of it, how do we adjust to it? Because you can't beat your yourself against that wall of trying to do something that the market is not simply responding to it. Right? Trying to trend following in a non-trend following environment is a recipe for chop, chop, and chop. So now we're going back into the bottom end of that range and harmony zone number 2, which is a support area, and the market responding back to it. How's my voice coming, by the way? Just do an audio check. Somebody said they couldn't hear me. Yeah, FOMC is tomorrow, so man, I wouldn't put it past this market. I've seen days before where the market before FOMC just makes a major move and just oh Jesus, look at that. There you go. That's a move. That's something. That's a nervous market right here. Well, what are they doing? So we're gonna bounce back up a little bit here. 34, 35. All right. Well, that's a flip. The 200 and the 100 now are in sync on the short side, and also we're in the middle of the range on the 200 NT Rinko. So that's just not something I wanna. You should expect more chop back up, and a market. Okay. Where's this thing? Well, I had an order out there for that 810 if we get there on a flush basis, and that will be a counter trend move. It's a higher risk trade, so you just don't follow it blindly. I mean, basically, it's a trade against a whole number. They may not give it to us here, but where it's location based because you're sitting here literally smack into the middle of the range on the 200 NT Rinko, and that's a typical area where you get a bounce. I was just hoping to get a flush then a bounce, but they're bouncing it already, so that kind of takes away my idea. To be honest with you, so I'm just gonna have to kind of cancel this order and wait. I'm just gonna step away for a second and get some water. I'll be back in few 1 minute. All right, I'm back. So potential captain set up short at 28. Yeah, if the market wants to do that, then that's so that short right here precipitated another run into a switch trade, and that really kind of tanked. Okay. We have a harmony zone number one as a resistance at 43 by 53. Harmony zone number two is 68 by 78. We're looking for rallies as a shorting opportunity, and we will reevaluate if we break anything above 68 and a quarter. So is somebody telling me that my charts are all out of whack? Can somebody confirm that? Where are we at in prices? $58. 858. What is going on here? Yeah, that's off big time. Yeah, I don't know what's going on. So I have to kind of disconnect and reconnect my connection. Hold on one second here. So you guys are right. We're way off. Yeah, Tara, I'm recognizing that. I'm correcting it right now. Here we go, and let's see. Let's see if that catches up. Oh yeah, way off, way off. Here we go. So we're hitting resistance right here, and that should be an area of resistance. To be honest with you, so we should see a pullback. Market is out of sync with that move, meaning, 200 and 100 not in sync. Oh, here we go. Oh, yeah. Just amazing what the market can do. Let's go back to ES and talk about ES a little bit here, right? Weaker than NQ. We have not even closed the one candle reversal. We are the 142 and a quarter is what will trigger the longs on a swing trade basis. We hitting harmony zone number 1 and 2. Zone number 1 is 29 by 32 and 36 by 39 is zone number 2. And there's a resistance up there at these levels. Globax is 51.48 and a half. So if we look at the past 2-3 days, what do we see? We see this tight consolidation. I believe it's just waiting for the FOMC top of day, and that makes it a bit of a challenge. And I'm under trading in the past couple of days just because of that. One of the reasons is that. Plus, I'm watching and seeing the market consistently trade between harmony zone number 1 and 2 and getting out of sync more often than what we will see in a trending environment. So that tells me I either need to scalp, need to trade the edges. If I trade with a minimum number of contracts, and then probably wait for the FOMC and see a bit better price action. I mean, I can play this game right here. I'm gonna get out of this trade. I mean, I had my cost basis at 43, so it was really a good cost basis. It just I needed that push and it didn't, so I took my stop. Moving on. Let's see what we can do here. Should be up to 44. Good job, Steven. Market struggling here. So we're back into in sync on the short side after that rally, and this move right here was just like literally the last line of defense to that type of move. So what I gotta have to do either wait for 794 to break or look for 890 to break. That would be a sign of a trending behavior. And I'm going to start looking for the next wave. And the next wave should be short. I mean, especially since this didn't hold. You have harmony zone number 1 and 2 as resistance. Market ran up to harmony zone number 2 to the top end of it and came back crashing in. We'll see if the rallies can present us with more short opportunities. It looks like the market is taking a nap. Doing. That's the key. Fuck you. Let's see. I guess the weakness in ES kind of just got the market to settle down here. Rallies are shortable. Target on a swing trade basis is 793 half. Ooh. Get down there, baby. Let's go. We hit that target that quick. Now the next target of that rotation is 768. Looking for rallies to short into this market. Market is in sync on the short side. I mean, we've made a significant move on ES, and on a swing trade basis, we closed this candle, and the next target for ES is 551.11. Harmony zone number 1 as a resistance is 23 by 26 and 29 by 32 is harmony zone number 2. Rallies are shortable in both NQ and ES. Just watch out for NQ popping up a little bit here, 98. Oh, 05. Let's see here. Gary Gibson. You guys are. Here we go. Target is 768. Next target 743. Target is 743. I mean, the market's pausing here. But I mean, we're coming to like a major support area right here, which is, if you look at it, that's the trend line right here, and they're coming up right to it and against a closure of the next swing trade, and they're bouncing this market back up. We have harmony zone number one as resistance at 93 by 803, and zone number two is 18 by 28. Rallies are shortable. We're looking for a signal up there. I mean, if we get to harmony zone number one and fade, like any 95s, like for example, I'll put a 95 order, 94 half order. So two switch trades. If we get another switch trade at 82, we should push higher to that 90s. I have an order here, another order right there, and I have another. I mean, that's more of a swing trade than anything. So just watch out. I'm going to take a little bit more risk in this environment. So basically, I'm using harmony zone number one, the neutral zone, and harmony zone number two as all resistant area. And between those two, three levels, the price should hit and pull back as a reaction to this move. Now, if all of this with an average of around 810 breaks above 830, then I have to cover. We may not even get these prices, be honest with you. We may just put a captain set up short right here and flush this market. And they did. Put captain set up short, sold it off. Okay. Let's see. I mean, that doesn't mean they're not going to pause it here and flip it back up. We'll see. So the run up to 94 will be the first touch to an actual level against a whole number 800 and against the harmony zone. So I got three reasons to be posting that order at 94 half. On the chance that they will push it higher to 807, I got another order there, and they typically will defend. They defend the break even if the break is strong, and if they have enough strength to go up here, then I have another shot at it. And we'll see. I'm either gonna make a little bit of money, or I'm gonna lose a little bit of money, or I may not even get filled in that whole thing altogether. ES. Let's take a look at ES again. So the be honest with you, I mean that should have been my Q in many ways. Is how ES was weaker than NQ, and eventually the weight of ES just kind of uh, pushed the argument in NQ. But we have a target of 5104 and 75 on NQ. I mean on ES. Harmony zone number 117 by 20 resistance area. Harmony zone number 2 is 23 by 26. Uh, well, God works in mysterious ways, Stephen. Ah, nah. You had a good trade, man. I don't know why you would be upset. I think everybody would have loved to have the trade that you did. Yeah. If you let's put it this way, if if you become that good to pick off tick high and tick low of any move, brother, I'll hand out this room to you. You could run it, and life is good. I'll listen to everything you say. Here you go, Stephen for president. No, you'll be Stephen for the master of the universe. Not even for president. What are you talking about? So you just have to be happy with what you get, whatever small or big. You have to be happy with your losses too. Part of doing business. Don't look like it doesn't look like they're gonna play with me on this one. What the fuck is going on? Target 743. Good Lord. Okay, target is hit. Target is hit. Next target is 718 half. Looking for rallies to short into, and these trades out there are not relevant anymore. So I gotta cancel them and reset. Actually, I could reset them. I mean, I could do 81. Oh Lord, I'm looking at your videos, Steven. Holy crap! It's a big old pile up. Mm. Target 718. Looking for rallies to short into this market. I mean, this spot should flip to a two-sided market. Here we go. We're coming up to harmony zone number 1. I mean, like right now, the market just hit that harmony zone number one and just paused. Not a bad spot for an initial entry, but since I didn't get it there, I'm just gonna wait for a higher price if I can get that, and see if yeah, good job, Steven. See you tomorrow, man. Slow price action all of a sudden. I mean, it bursts and it recovers and it just sits there. I mean, that spot right here actually was an entry point for the swing trade. Harmony zone number one. Environment is short. It's a good spot. Look at that. Damn. ES target is 5104 half. Yeah, I mean, I don't know what's the use of putting my orders up there right now. The market is just narrow and selling off, so it's not making these swings. So if I need to get in, then I need to get in like the middle of the range, or so I mean now the middle of the range is areas of interest, right? So I'm gonna cancel these two orders and try to look for another entry in this market. Target is 718. Let's go. Potential captain set up long if we break anything above 748. 748 will set the stage for a captain set up long, and there'll be a counter trend in this market toward 770. Let me show you what that looks like. You see right here, if they close that 48.75, let's call it 49, then that's a captain setup at the bottom end of the range. It's worth taking a shot at it right here with a stop under the bottom end of it, and look for the 60s and potentially the 67, 70s. So I'm seeing that, and here comes that market making a double bottom behavior. All right, let's see if we can go back up to 50. And I gotta go and break even on this thing. So break even with the potential of getting all the way up to 70. Let's go. Let's go, let's go, let's go. Make me some money. Oh, yeah. That's sexy right there. Add to that bad boy. Yeah, I think we should be up at 55, 56 soon here. It's a six-prong captain setup long. It's worth the risk. Here it comes. I took one off. Let's see if we can get something bigger going. Like right here is a spot where the market is going to retrace. So I may just take it right here and look for a retracement and then get back. Well, there you go. Freaking wankers. It's a good one. Yeah, that's a six-prong captain setup. I should get to 70 at a minimum. So if you can hold on to this one and see if you can get to a couple of prices, 70s and 95s. 70s and 95s are two spots where this price can go up to, depending on how strong. But the I mean, obviously, if you're still in it, then you got trailer, and you could play the trailer. You're gonna get to 70. I'm comfortable with my exit. I am comfortable with my exit. I am not comfortable with my exit. Why? Why? All right, so what does that do for me? Let's see here. So that's where we at for the day. Nice little recovery with those trades that I just did. And that's where we're at, the 146. So we hit equity high, and we just kind of pulled off of it, and we've been consolidating on equity, making a little bit of money, losing a little bit of money, making a little bit, losing a little bit. That's the day that got me twisted a little bit, and we just we'll recover from this. So I do this from time to time. I mean, look at that, equity high, then you're getting a pullback. This is a stair step, and now you're getting a period of consolidation here in equity, and eventually I'll hit equity high. All right, guys, that's it for me for today. I'm not gonna even try to trade the afternoon. I'm just gonna wait for the FOMC meeting to just show up and see what kind of market we have. The less I trade this type of market, the better off I am personally. So we need a little bit more volatility, and we will see you bright and early tomorrow. You guys have a blessed day. Stay safe, and we'll see you on the next one.